Trading prop firms is one of the biggest opportunities that traders have that we should all be taking advantage of. And this is coming from someone who just maybe a little over a year ago, I was kind of against them. My name is Josh Pavao. I'm a full-time futures trader, and the traders who trade live with me and use my strategy have over a 70% pass rate for prop firms. In this video, I'm going to show you how to reverse engineer a prop firm's rules and turn it into a trading plan. I'll show you how to work with the rules of the prop firms instead of it being the reason that you fail. I broke this course down into 3 phases: the challenge phase, the funded phase, and my favorite, the scaling phase. But before we go into the challenge phase, I created 2 free tools that go along with this course. The first one is a trading plan calculator specifically made for prop firms. You'll be able to go in there, put in all the numbers that we're about to cover in this course, but you can customize it to whatever rules your prop firm has specifically. And then at the end, it'll spit out a completely customized trading plan for you. You can find both of those tools by clicking the links in the description below, and they're completely for free. All right, so let's get started on the challenge phase. What I did is I went through a bunch of the top prop firms and I made a list of all of the rules that they have in the challenge phase. Now, not every prop firm has every rule here, but what I'm gonna do is I'm gonna explain each one of these, and then I'm going to translate this rule into an actual number that we can use for our trading plan. And we're gonna kick this off by starting with the max loss limit. The max loss limit is the amount that you have available as drawdown. So what this looks like is if you have a $50,000 account, most prop firms will give you something like a $2,000 or $2,500 drawdown. Now they call this drawdown. You'll also hear it called a trailing drawdown threshold, max loss limit, not daily max loss, that's next. So the max loss limit is the maximum amount that you're allowed to lose before failing the challenge. And the reason this number is important to me is because this number is how I determine how much I'm going to risk per trade. Let me show you how that works. Now, if you take a look at the industry standard normally says 1 to 2%. So let's say we take the industry standard, you have a $50,000 account, and we're going to risk 2% per trade. 2% per trade on a $50,000 account would come to $1,000 risk per trade. Now remember, if you have a max loss limit of $2,000, that means in 2 trades, you're going to blow the account. I don't think this matters how good of a trader you are. I'm pretty sure anybody can say, no matter what level you're at, that you've probably taken 2 losses in a row. Risking your entire account in 2 trades, to me, that's not worth it. Instead, this is how I like to figure out my risk. Let's use an example for the max loss limit as $2,500. Now, all I'm gonna do is I'm gonna divide this by 10, and this is going to give me the amount that I'm gonna risk per trade, which is $250. Now, the reason that I do it this way is, number one, it's way less than $1,000 per trade, but I just asked myself, is it unreasonable that I would lose 10 trades in a row? And I think yes. Like I can't think of a time when I've lost 10 trades in a row, short of like revenge trading or just doing shit that like I shouldn't be doing. It doesn't happen normally. So I chose this number. When you divide 2,500 by 10, what this means is you can take 10 full stop loss hits, right? You can take 10 full hits before you actually lose the account. Now you can take this number and change it to however you want, right? Like what if you wanted to take 20 trades before you lose the account? You would do the same thing. You're just gonna take whatever your max loss limit is. We'll use 2,500 again. You're gonna divide this by 10, right? And now this is going to give you $125 per trade. So it's literally just half of that. So where I'm risking $250 per trade, it's gonna take me 10 trades. You might wanna take 20 trades and you're gonna be risking $125. So all you have to do for this formula to work is you're gonna take your max loss limit and you're going to divide it by the number of trades that you wanna take before you blow the account. The number that this formula gives you is your risk per trade, which is the first number for your trading plan. Remember, if you don't wanna do any of that math, you can use the calculator below and just punch in your numbers and it'll spit out the trading plan for you. So now that we figured out our risk per trade by looking at our max loss limit, the next rule that we're gonna talk about in the challenge phase is called the daily loss limit. Now I know not every prop firm has this rule, but if you don't have it, you should still have it. And let me explain what this is and why. The daily loss limit is just the amount that you're allowed to lose in one day. Like that's pretty much as simple as it is. If you hit this limit, like let's say it's $500 for your prop firm, it'll say daily loss limit or DLL $500. Let's say your daily loss limit is $500. If you hit this number, like you lose $500 in one day, most prop firms, they just cut you off for the day. You don't lose the account, you didn't blow the account. It's kind of like, it keeps traders from going full tilt. It keeps traders from getting emotional and over leveraging and just taking losses in revenge trading. I actually don't hate that this rule exists. I never used to have this rule for myself because the prop firms like Apex doesn't have it, Take Profit Trader doesn't have it. So I never had one of these rules for myself. But let me show you the day that changed, which was a month ago. This is my Apex login right here. You can see it's a live login. I'm hovering over it, everything's working. I'll refresh the page if that works. I'll try one more time. I'll refresh the page, I'm still logged in. The only thing we'll block out is the bottom in case there's any sensitive information there, but this is the part that I wanna show you. When I first started, these are 50K accounts, and when I was I'm still funded with it, I was in between the $400 to $750 range for my profit target. I'm gonna show you how to calculate that, but we can see here, I was hitting about $700 a day. So we get to 600, 700, and all of these down here were break even. I did not, at the time of this, have a daily loss limit as one of my rules. The reason is because I'm very confident that I can make up losses. Like, I can take a loss, and as long as the markets are still moving, I can at least get myself back up to break even. Now, what happened on this day was the first loss that I took here, this was PCE. So it was December. The markets just kind of went to shit when the holidays started and volume died down. A lot of the entries I was taking weren't really working out as well. I took 2 losses in a row. So I took this one here, $782, about 800 in a row, right? So between $750 to $900, I took those losses. Your drawdown with Apex is $2,500. I almost blew the account by doing that, just because I didn't have a daily loss limit. And I was kind of doing that same thing where I was like, I'm gonna make this up. I'm gonna make this up. And every trade I took, it just fucking came back on me, and I closed in drawdown, and the trade was good and then bad. And I was like, this is crazy. So it happened to me 2 days in a row. But if you take a look here, you can see I changed something, right? I changed my risk. I went down a lot. I went from making $700 a day to I was happy with $50 a day. I went from taking 8 contracts down to 1 or 2 contracts with Apex. And you can see here, I was trading all through December, and yeah, a couple losses, but for the most part, it was like 100, 200 up, 100, 200 down. Kind of annoying place to be in, but it was the holidays, volumes were shitty. My point in this entire thing is that having a daily loss limit will save you. It will, because in the moment when you take that loss, you're like, fuck this, I'm gonna make it back up. And honestly, I'm pretty aggressive, and that's how I feel. And I'm like, I know what I'm doing. I'm gonna fucking make this back up. But what sucks is when you take 2 or 3 of those big losses, and now I was $400 away from losing the account, and I'm like, I can't be as aggressive anymore. So I feel like I handicapped myself by doing this because I didn't have a daily loss limit rule. I was $300 away from getting a payout. It wasn't the $40,000 payout, which would be maxed out because this is 20 accounts with Apex. I was $300 away. I took those 2 losses, and I'm still trading with those accounts and didn't get a payout from Apex yet because I'm crawling back up. All because I handicapped myself with 2 days of losses, and that was it. But had I stopped at like $400 and then took another day with $400, I still would have lowered my risk and made all of this back up a lot faster. So if you don't have a daily loss limit on your prop firm, I highly recommend having one. It will save you. Here's how I go about setting up my daily loss limit. The first thing I'm gonna do is, we already know this number, right? We know I'm gonna put RPT. This means our risk per trade. We know our risk per trade is $250, right? All I'm gonna do is I'm gonna double it to 500. And this is my daily loss limit. Once again, this is assuming if your prop firm doesn't have one. I like this as a general rule of thumb. Now, the reason that I like doing it this way, instead of just saying, because technically you could just be like, why don't you just have a rule that says, I'm gonna take 2 losses per day. If I did that, 2 losses at $250 a day, right? It would be the same thing, it would be this $500. So if you have this rule, I'm gonna have 2 losses a day, and then I'm done trading. Or you could do this. I'm going to risk, or I'm gonna stop trading if I lose $500 in a day. So we have these 2 rules. What happens is, this one's very black and white. If you take 2 losses, you're done. $500 for a loss, I might take 1 trade, and then for some reason I don't like it, and I close that trade with negative $100. I might take 2 more trades, and I might close them with negative $20. I just technically lost 3 trades in a row, but I've only lost $140 versus this one, I'm already over trading because I've taken 3 trades. So I don't like having that rule of I'm only allowed to take this many trades. I don't know how many opportunities the markets are gonna give me. I don't know how many times I'm gonna get faked out, but I still know that I wanna keep taking trades, assuming the opportunity is there and assuming I haven't hit my daily loss limit. So for me, having a daily loss limit as kind of my North Star or as my guide, instead of looking at, I need to take 2 or 3 trades and then that's it, that doesn't matter to me as much. The amount that I lose and the amount that I make, that matters way more to me. Now, granted, I'm pretty disciplined in the trades that I take. So if you have zero discipline and you really need to stop yourself from taking trades, if you're taking 1 million trades a day, I'm over exaggerating, but if you're taking 40, 50, 60 trades a day on one account, yeah, you're probably over trading. Unless if you can actually justify this 40, 50, or 60 opportunities based on whatever strategy it is that you're using, then fuck it, do it. But if you're not hitting your daily loss limit and you're hitting your profit goal, who cares, right? All right, now that we know our risk per trade, right, we're sitting at this $250 and we have our daily loss limit, which is just double that at $500. How do you know what contract size to take? And this is gonna lead us into the next rule right here. If I can delete this, I'm gonna figure out how to use this. If I can delete it, so contract size. The contract rule is basically just a rule that states the biggest contract size that you're allowed to take. And a contract size is just a position size. You know, if you come from the Forex world, which is where I started, it's called a lot size. So the position size that you're allowed to take is limited by most prop firms. Now the thing is, you're typically allowed, like I'll just use a general example, you're typically allowed 60 micro contracts, okay? So let's assume you're gonna follow all of the other rules that we just went through. Let's assume we're gonna stick with our risk per trade at $250, right? If you wanna risk $250, let's say you use a stop loss size of, and I'm gonna show you how to set the stop loss size and how to measure it. But if you use a stop loss size, let's say an average of 100 ticks, which with NAS and volume is kind of low. 100 ticks, and you want to risk $250, this comes to 5 contracts, right? You're allowed 60. And if you take 60 contracts and you have a 100 tick stop loss, you are risking $3,000 in that one trade. You're gonna blow past the daily loss limit. And the thing is, like, you don't even need to be in a bad trade to lose your account by doing this stuff. When you start over leveraging and you take a trade, like if there's a resistance area here and you enter, let's say you're taking a breakout, cool. But if it just pulls back a little bit when you enter, just that little bit of drawdown is enough to blow your entire account. You might still have a good trade with 100 ticks in drawdown just because volume's kind of bouncing around. So you, like, at least I'll speak for myself, I want to give myself that grace, right? I'm not trying to pass in a day. I'm not trying to pass in 2 days. I'm not trying to over leverage my ass off and just ride this fucking roller coaster of ups and downs. It's a really annoying place to live. I've been there. So if you can just slow down, lower your contract size, you're not gonna need the full 60 micros that these guys allow you to have. They give you the opportunity to do that on purpose. So as long as you're sticking to your 250, whatever number it is, as long as you're sticking to your risk per trade and your stop loss size, you will never need to worry about maxing out these contracts. So what you do want to do is you want to find out what contract size do I use, right? If I'm not going to be using 60, how do I figure out what contract size to use? So a couple of things that you're going to want to know. At least, I'll show you how to do this in the charts, but at least off the top of your head, you want to have a general range for how big your stop loss is. How big do you normally do it? I'm going to use 150 ticks as our example here, and we're going to stick with that $250 of risk per trade. And what I'm going to do is we're going to go to the TradingView, we'll go to the charts, and I'll show you how you can actually measure this yourself to figure out what contract size you want to take based on the stop loss size that you use. All right, so we're going to head over to TradingView, and the first two things you need to know is where's my entry and where's my stop loss, and that's it. So I'll put this little thing here for this little tool just for some visuals. Let's say I entered sells here and I'm in this trade and my stop loss is up here. Now I actually do this actively while I'm trading. I'll come over to this ruler, and here's what you want to do. You're going to hit this ruler. You're going to click wherever your trade entry is, and you're going to measure to where your stop loss is going to be, right? So I'm going to round this up to 150 ticks. I'm going to take a trade and I'm going to have around 150 ticks for a stop loss. Cool. So what I'm going to do is I'm going to come over here. If you're logged in to TradingView, you have this little button at the bottom. You're going to hit that trade button, and it's going to open this cool little box here. I always have this open when I'm trading. And what I do is we're going to come over to this cool little box here, and I'm going to click this box that says stop loss. I'm going to put in 150, and on the bottom what you're going to see is a number pop up. That number says I'm risking $3,750 if I have 150 tick stop loss with 50 contracts. So it's obviously way too much. So how do I remedy this? I have two things to do if I want to decrease my risk. Number one, I can decrease my stop loss. If I go down to 20 ticks, if I go down to 10 ticks, there you go. 10 ticks, $250. But you're talking about my stop loss needs to be here. Like I'm definitely going to lose that trade if it's that close to price. You have to give it a little bit of breathing room, right? You want to put your stop loss based on market structure. So instead of lowering my stop loss, I'm going to keep it at 150 because I'm going to go based on market structure. The only other solution I have to lower my risk is to lower my contract size. I'm going to come here, I'm going to put in 10. And you see this number on the bottom change to 750? That 750 is still too much. So we're going to go to, let's try 5. 375, we're getting closer. I'll try 3. $225. That's like right there, right at the 250. If I go to 2, too low, it's 150. If I go to 4, 300, it's close. You know, you're kind of cutting it. I like to aim a little lower. I don't want to increase my risk too much, but do what you want. My point is, this is how you figure out, or this is how I figure out the contract size. So if I want to risk $250 per trade and I have a 150 tick stop loss, I want to take 3 contracts. That's it. Now the next rule, the consistency rule, is basically something that limits how much you're allowed to make in a single day. This is usually measured in a percentage. I'm going to use Top Step as an example because it's the first one I can think of off the top of my head that has a 50% rule in the challenge phase. And their rule basically states you're not allowed to make more than 50% of your profit target in less than 1 day. I'm supposed to say profit target. There we go. So you can't make more than 50% of your profit target in 1 day. Now what that translates to, let's say you have, with Top Step, a 50K account. And this 50K account has a profit target of $3,000. 50% of that is telling us that you are not allowed to make more than $1,500 in a single day. And if you do make more than this $1,500, you don't lose the account. Instead, they increase your profit target. So it's like instead of having to make $3,000, now you might have to make $5,000. All because you wanted to make an extra $700 in 1 day and try to pass the challenge faster. It's crazy because you end up slowing your progress down by trying to speed it up, right? Everyone's trying to pass in a day. Everyone's trying to over leverage and just pass as quick as you can. And what you end up doing, if you break the consistency rule, is you increase the time that you're in the challenge phase because you chose to over leverage by hoping to decrease the time you're in the challenge phase. And it had the opposite result, which I think is a really good lesson in being more patient. Now the consistency target gives us one number, and this is going to be this one right here, our max daily profit. So our max daily profit, let's fill this in. We have $1,500 for our max. But there's 2 problems with this. Number 1, what if you don't have a consistency rule? You have no profit target. Number 2, if you are trading with $250 risk per trade, you have to make a very, very large trade to hit this. So instead, what I like to do is I like to have a range. I like to have a minimum daily profit target and a maximum daily profit target. So how do you figure this out? I'm very simple with this. I try not to overcomplicate this stuff. And what I do is I take my daily loss limit and I make it that. So it's an interesting thing that happens here, right? Because if we look at all of these numbers, and let's say you're risking $250 per trade and your minimum daily profit is $500. Now I'm saying minimum. That doesn't mean that's your target. It's the range of $500 to $1,500. I have the max I'm allowed to make, which I would still go below 15, but I have the minimum that I want to make too. So what happens is I'm actually looking for a minimum of a 2 to 1 here, right? So if I risk $250 on one trade and I close with $500, I'm looking at a minimum of 2 to 1. Once again, I don't like to stick to, I just look at the rules differently. I'm not sitting here saying you have to have 2 trades. The same thing with this risk to reward shit. Everyone's like, I go for 2 to 1, I go for 3 to 1 minimum, I go for 30 to 1. I don't give a shit. I just want to be profitable, and I have a range in which I'm willing to close my trade in that's still going to get me closer to my goal. And that's what matters to me. The reason I chose the same number as my daily loss limit, number 1 is because it simplifies things. And number 2, if you were to look at it this way, let's say I lose one day, $500, gone. I win one day, $500, gone. This is the worst case scenario. The worst case scenario is that I am break even. I'm okay with that. I'd rather be break even than continuously losing. Now, obviously, if you lose days in a row, you're gonna be more and more, you need to have a good trading strategy, right? If you're bad at trading, risk management is not gonna help you at all. A lot of this is focused on risk management. You should still know how to trade. So now from a risk management perspective, I have everything I need. I know my risk per trade. I have my daily loss limit, my contract size, my minimum daily profit, this should be 500, and then my maximum daily profit. A lot of these things you can put in the broker as risk management settings, and it's done automatically for you, so you don't even have to think about it. You just need to figure out the numbers up front and then go from there. Now, there are still a lot of other rules that prop firms have, so I want to move on to what I would consider the challenge phase, but less important rules. These are things that I deem personally as something that, like, it doesn't really impact my trading plan. It's not something that is changing what I do from a day-to-day perspective on the trades that I take. So the first one for that is called the minimum trading days. The minimum trading days just states how many days you have to trade before you're allowed to pass the challenge. The problem is, I think a lot of traders look at this as a goal, right? They're like, hey, if it's 5 days, how much do I need to make in order to pass it in 5 days? It's like they want to get to it immediately. Honestly, if you have a profitable strategy, if you're using good risk management and you're following your plan, this number, these minimum trading days, it should be irrelevant. For me, it's kind of like a nice to know, not a need to know. I want to know when I'm eligible to pass the challenge, right? I want to know when I'm eligible for a payout. Those matter to me, but it doesn't change the decisions that I'm making when I'm actually trading. I'm not looking at the charts and I'm sitting here like, oh shit, I have 2 days left, I should take this trade. No, I'm taking good trades and that's my only rule. This number shouldn't change any of that. It's funny, when prop firms first started, you used to have to pass the challenge in 30 days. And I always thought that was horrible. It's like, how are you gonna tell me I need to make a certain amount in 30 days? I can't choose what the markets do, right? It's impossible. So the fact that they get rid of that is cool, but it's like a psychological thing where adding the minimum trading days, we still look at it as a goal of something to beat. I don't think that's the right way to do it. If you're one of these people that are sitting here and you're like, fuck man, I need the money. Like, I really need this. I need to pass. I need to get this payout. I need to do this. If you're one of those people, number one, you should probably get your finances straight. But I'd ask you this question, and we're gonna go full screen for this because I wanna have a heart-to-heart with you real quick. One question that I think is helpful to ask yourself is like, have you made any significant money, like life-changing money from a prop firm, like a payout yet? Is that money currently the reason that you have a home? Is that money currently the reason that you have food on your table? Probably not, right? So we put this imaginary pressure on needing the money. We need to pass today. We need to get a payout fucking yesterday. But realistically, if you look at your life, most of the shit that you have probably isn't funded or being taken care of from payouts. Now, if it's your only income, okay, I understand the pressure there. But most of you guys are just putting this fake pressure that doesn't exist because ego, desire, need, want, whatever it is. But if we can remove that, if you can just take a step back and be like, I don't need this, it will be so much easier. I fucking promise you. Like, you will see the markets looking like shit and you're gonna look at this and you're gonna be like, that looks like shit. I don't need the money, I'm not taking the trade. And it'll increase the patience that you have to wait to take the trade that you wanna take. When you don't need the money will come to you faster. And this looks like you stop forcing trades, you stop over leveraging, you stop going break even too early, you stop being emotional. All of this shit gets fixed, all because you stop focusing on trying to pass it within the minimum trading days or just trying to force and rush the process. Just take good trades, just take good trades, use good risk management, and you'll be fine. So minimum trading days for me are a nice to know, not really a need to know. And this brings us on to the next less important rule for the challenge phase, and this is the hedging rule, which the hedging rule basically just states don't be in a long position and a short position at the same time, right? So if you were to go and buy, you go to Apex and you buy 20 accounts. If you were to take 10 of those accounts and you were to go short on NASDAQ, we'll put NQ, MNQ, whatever, and then you would take the other 10 accounts and you were to go long, which means enter buys on NQ, which is NASDAQ, this is violating the rules. You can't be on the same account in separate trades in two different directions. That's it. It's a very simple rule. Like just don't try to game the system. I've seen, I don't know what strategies you guys have. Maybe you have something where you want to be long and short on NAS or gold or whatever at the same time. But the stuff that I have seen, which I think this is what this is combating, is like what a lot of people are doing is they're buying an account, they're waiting for data to come out or something and just entering buys and then entering sells and hoping one of the challenges passes. And it's like, there is no more surefire way to guarantee that you will not be a consistent trader or even get payouts consistently if you try to game the system. These prop firms have hundreds of thousands, if not millions of dollars into technology tracking everything that you do. The amount of data that they must have is through the roof. They're looking for this stuff. They're looking for you to violate rules. They're looking for reasons not to pay you out. Don't give them reasons. This, once again, hedging rule, it should be a really easy one to follow. The next rule on the less important rules list is news trading. Now, don't get me wrong, this rule is important. The reason I put it on the less important list is because the rules vary so much depending on the prop firm that you're with. You can be with one prop firm, and depending on the account that you choose with them, some might allow news, some might not. I think with Forex prop firms, they actually make it like an add-on that you can use. So I'll show you, like this rule basically states something like, I'll use Take Profit Trader for an example. There says 2 minutes before and 2 minutes after. So what this means is you're not allowed to be in any open positions 2 minutes before or 2 minutes after high impact data. Now, some prop firms will list the specific high impact data they're talking about. I would recommend figuring that out because like Take Profit Trader, there are 3 of them. I won't go into it for this, but figure it out for your prop firm. So what this means for 2 minutes, I'm gonna use Eastern time because that's my time zone. I normally get data coming out around the majority of it, 8:30 a.m. Now the 2 minute rule states I cannot be in any trades at 8:28 or 8:32, right? So a 2 minute rule gives us a 4 minute window, 2 minutes before, 2 minutes after. This means if you're holding a trade going into this, you need to close the trade before 8:28 because you cannot have any open positions in that time frame. It doesn't say don't take any trades within that. It says no open positions. Now, to be fair, I'm just going off of the rules that I've read. I'm trading with Take Profit Trader right now, so that's the rule that they have. There might be a prop firm that just says if you're already holding the trade, fuck it, stick with it. If you can hold the trade through news and you can go break even for it, have fun. Hopefully you know what you're doing, but just make sure that you understand this rule for your prop firm specifically. Okay, we know minimum trading days, nice to know, not a need to know. We now know the hedging rule. You probably shouldn't try gaming the system. The news trading we went over, and let's cover the second to last on the less important rule is the 2% CME rule. Now the CME is where futures are regulated, created, and controlled. The rules for futures are from here. And the CME limit is basically just a predefined range where price is allowed to go. So here's how it works. Let's say it's 4 p.m. Eastern and the market's just closed and NASDAQ closed, we're gonna use an even number. Let's say NASDAQ closed when the market's closed at $25,000. That number gets recorded. And the CME limit for NAS specifically is 7%. So the way this works is you have a 7% rule on this $25,000 close price. What this is telling us is that price is not allowed to go 7% above, 7% below. Now, if price does pass this limit, what happens is trading becomes restricted. Volatility increases and you can literally blow your account. Like the slippage gets crazy, the markets go haywire. So what happens is they hit a circuit breaker. Trading halts. Now, this rule actually applies to all of your prop firms who trade futures, but the 2% CME rule is actually from prop firms which bring a buffer, right? So you have this little 2% buffer on each side here of 2%. So your rule, our rule, whatever prop firm you're using, if they have this 2% CME rule, it basically means you need to be within 5% of this number. Now, how the hell do you figure out for every asset that you're trading what 5% is? And you also need to remember that number while you're trading. I'm gonna show you a little trick. So we're gonna hit this indicator. I'll make the chart a little bigger. We're gonna go to this indicator here, and it's called the CME price limit. There are settings you can put on it, but I'm gonna make it visible so you can see it. We'll remove these drawings, make it a little prettier, a little easier on the eyes. And you see these red lines? This is the CME price limit. So this is what tells me, and I can change the settings on this. Look how far away it is. So it's not really something you need to worry about. That's why I put on the less important, but it's still something you want to know in case something happens in the markets like COVID or tariffs or trade war again. It's good to know these limits, and you can keep this on if you want to, but if you double click it, see how it says percent limit 7%, buffer 2. So this red line right here, it already follows the 2% CME rule. If you want to put this on your charts, I think it's super helpful. Now that we have the majority of the less important rules put out of the way, we have one more to cover, and this one is called the 5-to-1 risk to reward rule by Apex. I'm gonna show you this example on the charts. I still think this 5-to-1 risk reward rule is something that I don't care about because it's not something that I'll ever do. Hopefully you guys don't do it too, but basically what it states is when you take a trade, your stop loss should not be 5 times more your take profit. So you shouldn't be doing shit like this, right? I'm generalizing, but that's what it's saying. It shouldn't be more than 5 times the amount. And at first when I heard this rule, I was like, that's ridiculous. Why the hell would I do that? And I can think of 2 things that Apex is specifically going after people for this rule. Number 1 would be if you're in a trade and you just keep dragging your stop loss. You're like, fuck man, just reverse. And eventually you're gonna hit that 5-to-1, whatever, depending on where your take profit is. The second thing that I've seen someone do, which I think is crazy, is you'll be in a trade and you take your take profit and drag it all the way down right to where your entry is and let it hit your take profit and close. Like if you're decreasing your take profit or if you're increasing your stop loss, you're going to violate this rule. If you wanted to do the thing where your take profit, you drag it down and you close it, just close the trade manually. Like, it doesn't make any sense to me why you would be dragging your take profit down. Maybe there's something I don't understand with that. I just think if you're going to scalp that aggressively or you want to close the trade early, just manually close the trade. How is Apex or any prop firm going to come to me and tell me there wasn't a reason that I closed the trade? My target might actually be only 10 pips. I don't need to actually make the take profit there though. I can put the take profit, I can take this take profit, I can put it 700 ticks up if I want to, but I can manually close the trade when it gets here, right? The only thing with this is stop dragging your stop loss, hoping the trade reverses, and don't drag your take profit down in order for it to close your trade out. If you follow those 2 things, you should never violate the 5-to-1 risk to reward rule. This is why I put it on the less important list. It's like, I don't have a habit of doing that. I just don't think it makes sense, so it's not something that's ever really mattered to me, but it's still a rule that's important to know. Cool, so now instead of taking your next funded challenge and just trying to pass it as fast as you can now create an entire trading plan that's reverse engineered specifically to the prop firm that you're using. So that way, if you have a good strategy, assuming you have a good strategy, and you follow this risk management plan, you will now graduate to the funded phase. Now, as far as I know, when you're in the funded phase, the prop firms give you the exact same account size that you were in the challenge phase with, right? I haven't seen one that they give you a different size. So for risk management, when you're in the funded phase, you don't really have to change anything, right? So we're gonna pretend you're still using this 50K account. We'll keep the risk per trade at 250, great. We're gonna keep our daily loss limit at 500, and we already know that we need to take 3 contract sizes. So the risk management there is done. What we don't have anymore though is we no longer have a profit target when we're in the funded stage. You can just keep making money, which is nice. So what we do need to figure out though, or at least what I like to figure out, is still gonna be my minimum and my maximum daily goals. I still like to have that range that I'm happy with. So let's walk through that because I think this is really important. Let's start by figuring out the max daily profit. Now, just like in the challenge phase, what I want to do is I want to reverse engineer the prop firm's rules. Except this time, I'm going to be reverse engineering what does a max payout look like from the prop firm. Now, the problem is max payouts look different for every prop firm. They all have different rules. So I went through all of the rules that I could find, and I broke this down into what I think is 3 different categories for figuring out the max daily profit. And the first rule, well, the first category would be if your prop firm has a payout limit. Now, if you have a prop firm that has a payout limit, there are 2 things that I want to know. Number 1 is I want to know the minimum trading days before I can get a payout. Now the minimum days matter when you're reverse engineering this part. So I want to know the minimum days, and I also want to know what the maximum payout is. So for an example, let's just say your maximum payout is $5,000 and your minimum days is 5 days. Right? So your maximum daily goal from this would be what? What's the most you would make in order to max out this payout? $1,000, right? So all you're doing here is you're just dividing, right? You're taking the maximum payout, you're dividing it by how many days. This number is the maximum amount on the high end of the range that I want to make per day, so that way I can max out the payout. Make sense? So now if we come back to our trading plan, we can go to our max profit and we can be like, all right, $1,000 is my maximum profit per day. So if you have a prop firm that has a payout limit in the funded stage, this is how I figure out the max daily goal. Now the second category of prop firms and payouts is if they have no payout limit whatsoever. I think there are pros and cons to this. It's really good that you're not limited on how much money you're allowed to make, but at the same time, like I said before, if you don't commit to a number early, the sky's the limit. The only reason you have to stop trading is if you hit your daily loss limit or if you start losing too much. That's the only reason to stop. So even if your prop firm doesn't have a payout limit, I still like to have a rule. I like to have something that I'm aiming towards. Even if it's a soft number, it's something that's getting me closer to my goal. So if you don't have one, make up whatever you want. I like to go with $1,000 just to start, especially if it's a new funded account. $1,000 for a max goal, especially if you're risking $250, that's a pretty good trade. Like that's not bad. Now, it doesn't mean you have to close the trade at 1,000. For me, it's like the max. I probably would close, but if price is really taking off and you're in a really good trade, at least go break even, start trailing your stop loss, protect your capital, maybe take partials, do something that gives you money in your account instead of always thinking every trade needs to be a home run. Do what you want. I'm just speaking from my own experience and things that have helped me. I'm saying it as if I'm telling you what to do, but just speaking from my own lessons. So $1,000 a day is how I like to look at it if I don't have that payout limit. And honestly, when you do the math, $1,000 a day is still gonna be $5,000 a week, which is still gonna be $20,000 in a month, where most traders are probably not making $20,000 in a month. Times that by 5, because you can copy trade 5 accounts with most of these prop firms. I have 26 funded accounts that I'm trading with right now, and I'm going to like over 100. So this is only 5 accounts, and you'd still be making $100,000 in a month. You can make $100,000 in 1 month by making $1,000 a day. Let that sink in. And this, honestly, is just scratching the surface. Because when we get into phase 3, like all hell breaks loose. So have the daily profit goal. It will help you get further faster. So if your prop firm has a payout limit or no payout limit, you now know how to figure out your max daily goal. But if you have a consistency rule, this is category number 3, this is gonna change your max daily goal. Now the consistency rule is very similar to what we talked about in the challenge phase. Basically what it states is that if you make more than a certain percentage, you're not allowed to get a payout, and that's it. So we're gonna use Apex as an example, and the first thing that we wanna know still is the max payout. So for a 50K account with Apex, your max payout is $2,000. The minimum days, we still wanna know this, is gonna be 8. So we're gonna do the same thing that we did before with the payout limit prop firm, right? We're gonna divide this. And when you divide 8 into 2,000, you'll find that if you make $250 a day, which is just a 1-to-1 if you're risking $250, but if you make $250 a day on average, you will max this payout out completely. Now, what I do with this number is I like to make this my minimum, not my maximum. I like to take my max from the consistency rule, and I'll show you how to do that. But the first number that I get is 250 is the bottom of the range. So let's erase all of this. So with prop firms that have consistency rules, there's a few more things that we want to know. The consistency rule is 30% for Apex. Another thing worth noting is I need to have a minimum balance of $2,600 in order to request a payout. So if my balance needs to be at least $2,600 before I can make a payout with Apex, what is 30% of $2,600? If I do it this way, it gives me a number of $780. The reason I'm doing the math like this is because the way I look at it is my balance when I'm getting a payout will at minimum always be at least $2,600. So if I never make more than 780, I round down, I go to 750 for my goal, but if I never make more than 750 or 780, I should be fine as long as I'm always hitting this minimum balance, right? So the cool thing is, if you make this number, whatever is close to that, you're never gonna really have to worry about breaking the rule. I'm making between 250 to 750, and no matter what, anything inside of this range is gonna get me to a maxed out payout. Now, this is the range that I came up with, right? We have 250 to 750, and one of the things you might be wondering is, why do you even have the 750, right? If the maximum is 250 and you can't get anything more, like you're maxing your payouts out at 250, why do you care about making anything else? Apex is different. With Apex, after the 5th payout, your payout limits go away, right? So let's play this out. Let's say on average, you make $750 a day for the first 5 payouts. And then after the 5th payout, remember the payout limit goes away. So if you do this, $750, let's say for 8 days, right? You're gonna make $6,000, but you wanna pay yourself, so you're gonna take out $2,000. This leaves you with $4,000 in your balance. Now, you can't withdraw that, but you can keep trading and growing it. And if you keep repeating this over and over again, after the 5th payout, you're gonna be sitting on $20,000 extra, right? So this is assuming you have the $750 a day, you're maxing out the payouts. So you're now sitting at $20,000 extra in your account. And after the 5th payout, you can now start withdrawing more. So whatever it is that you choose to do. Now what's crazy is that this is for one account. I'm doing math for one account. So if you make $750 a day after your 5th payout, you're sitting on an extra $20,000 with one account. Times this by 20, because I have 20 accounts with Apex right now. This is an extra $400,000 in payouts sitting in your balance. An extra $400,000 by making $750 a day. So if you're in the funded stage, this, at least for me, is how I figure out my maximum daily profit. And then with the consistency rule, it's how I figure out the minimum. One thing I didn't touch on is the minimum for the payout or the no payout limit. Honestly, I would just take the daily loss limit and make that the minimum as your minimum profit. So it's like you have $1,000 and $500, which is just a 1 to 2. So I would just keep that the same if you don't have that. The difference here is that the consistency rule, it forces you to kind of have that range. You have to have a max, and the minimum maxes you out. So I think this is a really good way to do it, whether you have a payout limit, a no payout limit, or a consistency rule. I don't know why that keyboard just popped up. So when you're in the funded phase, you now know how to figure out your risk per trade, right? We have that. You have your daily loss limit at 500. We have a contract size at 3. And you now know, based on, there's 1, 2, 3 different types of payout rules, you can now figure out your minimum and maximum profit target based on that. Now this is going to bring us to, there are 2 more rules that Apex introduces when you become funded. So this might be specific to Apex. I think some other prop firms have this too. But the first one that we're going to cover is called the MAE rule, or also known as the 30% negative P&L rule. So the MAE rule, or the 30% negative P&L rule, it basically limits the amount that you're allowed to lose in a single trade. It's not the same as your daily loss limit. Your daily loss limit is for the entire day. The MAE rule works like this. Let's say you have, the beginning of the day, you're sitting on $5,000 in profit. Like this is your balance on a $50,000 account. So you're actually sitting at, we'll call it $55,000 balance. You have $5,000 in profit. The way this rule works is you are not allowed to lose more than 30% of whatever your profit is in one single trade. So basically, when you take a trade, you cannot reach $1,500 in drawdown, and that's it. This number is really important because even if you go a little bit into this drawdown, but you don't close at the negative 1,500 and you come back up and say you close at break even, you still violated the rule. So they're still gonna deny you a payout because of that. So this gives me another thing to add to this trading plan here, which is going to be, now I have a maximum loss limit per trade. So you can have this in your trading plan if you need to. Your balance changes every day, right? So one of the ways that I like to pay attention to this is I kind of create milestones and I just stay within these ranges. So I'll look at we'll do $2,500, we'll do $5,000 in profit, we'll go to 75 and we'll do 10,000. So I want to know what 30% is for all of these, right? So $10,000, 30% of this is 3,000. And then we have the 1,500 that we just did. And this is probably going to be 750. And then this would be around 2,250. So basically, when you reach these milestones in your balance, you know that you can't lose more than this. And once again, if you're using good risk management, this 30% negative P&L rule shouldn't be that big of a deal. One of the things that I like to do with this is I look at these milestones, right? And let's say you're at $0 in profit to 2,500. So I'm just gonna use this 750. This is my max loss per trade. But if you look at the trading plan, I'm not even risking 250 per trade. So it can be really hard to reach this. Now, don't get me wrong, shit happens. Sometimes the markets might do something, it might miss your stop loss and you might lose more. So what I like to do is I'll go in the back end of my broker and I'll just create these risk settings. I'll put it I'll put it like 700. So just in case something happens in my copy trader or whatever, all of my accounts will close at whatever predetermined number I choose based on this rule. Because once again, if I'm following my risk management plan, I shouldn't have to worry about this. But I can't control what the markets do. I wanna make sure I have as much control on this risk as possible. So I'll go in the back end of the broker and I'll just put the numbers in there. You just need to do this math once for this one specifically, figure out what that number is, and you're just gonna go put in 750, and you really shouldn't even have to worry about this number ever again. But you can also set reminders for milestones when you hit this, and you can increase this, because obviously you're gonna wanna increase your risk as you're making more money so you can make more money, right? Which actually leads me into the final rule for Apex that I don't think a lot of people know about, so let's cover it. Now, this last rule in the funded phase is a little tricky, and I'm willing to bet this is one of the reasons why so many people fail. I found this rule by accident as I was reading through Apex. It's called the contract consistency rule. And basically, this rule forces you to be consistent with your risk management and your consistency. So here's how it works. Let's say you're trading, right? And you have your 8 days in order to pass a prop firm, in order to get a payout from Apex. So on day one, you're gonna start trading, and you're gonna be taking 3 contracts. Now you're following the 250 to 750 or whatever your numbers are, and let's say you're making on average $500 a day and you do it for 5 days. So on day 5, right here, you're now sitting with $2,500 in profit. You have enough where you're right there in order to get a payout from Apex. If you decide to lower your contract size, to lower your risk so that way you can trade the remaining of these days without losing what you just did, they're gonna deny you a payout. They consider that an invalid strategy because you're not using consistent contract sizes. Nobody actually makes more money and then stops risking it so that way they can make less. But they will do it if you're doing it to secure a payout. Apex doesn't like that. So they have this rule in place in order to stop that from happening. Now there's something else that they talk about too on their website, and let's play this one out. Let's say you're trading and you have an account balance of $5,000, or I'm sorry, you have profit of $5,000. After a week, you have $10,000, and you keep going to $15,000, right? If this entire time that you're making this profit, you're still only using 3 contracts, they will also consider this an invalid strategy. They want to see your contracts increase with your balance, because realistically, that is what good trade management or risk management is. Like, you're making more money if you're only risking 1 or 2%, whatever it is, you can risk more. Most people don't do it. Now, trading this rule kind of leaves us in the gray area because on their website, they don't give us any specifics. Like, they don't say, after you make $1,000 in profit, you need to increase your risk by 2% per trade. They don't tell us any of that. They just want to see the changes, right? So the way that I like looking at this is I have milestones in my profit and in my balance. So kind of like what I showed you before, I have these $2,500 milestones, and what I do is I have a reminder to check every time, and I reevaluate. I'll go look back at the 30% negative P&L rule, and I'll come to this one and be like, am I willing to increase my contract size yet? If I am, I'll go up 1, 2 contracts. It all depends on where my balance is at that time. But you want to know that this rule exists. Like, it makes complete sense to me to secure a payout and then take 1 or 2 trades with a lower contract size just to get the minimum trading days, but they don't want you to do that. And it also makes sense to me why they don't want you to do that, because you're gaming the system by trading an invalid strategy that you wouldn't do if it was a live account. I understand not a lot of prop firms have this. Apex does. I still think it's worth going with something like Apex because I can get 20 accounts. And I can't do that anywhere else. And to me, it's worth it. It's worth dealing with weird, strict rules like this because I think the payout at the end is way fucking worth it. All right, wow. So we've gone through the challenge phase. We have our trading plan and we know what we're doing. We've also made it through the funded phase. We have our trading plan. We understand the daily targets, the consistency, all the crazy stuff Apex has. But what about scaling, right? What do I do when I'm maxing out my payouts? Do I start copy trading multiple accounts? Do I transition to a live account? Do I go live with the prop firm? I would say yes to all 3 of those. Now, everything I'm going to cover in this section in the scaling phase, number 1, it's my favorite topic because I like going big with things. I'm a little aggressive. And number 2, this isn't linear, right? These things can happen all at different times. You might go live with a prop firm, you might go to your live account, or you might start copy trading other accounts at all different times. So this next section is not in any particular order, but we're gonna cover it, so let's get right into it. Here's how it works when you first start with a prop firm. Now, a prop firm, we'll put a little house up here, is a business. And this business has 2 buckets. They have an asset bucket Now, this is the bucket full of things that makes the business more money. Things like customers, marketing, whatever. You also have a second category or a second bucket here, which is called your liabilities. This can be bills, expenses, whatever the case is. Now, when you start with a prop firm, you start in the asset section, right? You're a struggling trader, you're trying to make some money. This is where you are. You're making the prop firm money by buying challenges. Now, what happens is when you become profitable after following this awesome trading plan that you just created, what happens is you now get put into the liability section. The reason is because you're not actually trading with a live account connected to real markets. You're doing the same thing that you were doing here, except now you're profitable, which means they're giving you payouts and you become someone that the prop firm is paying instead of what you were doing before when you were paying the prop firm. Now this switch is when they put you into a live account and a prop firm, whoops, let me erase this. Now what happens when a prop firm switches you and puts you to a live account and assuming you're still profitable, you now go back to being an asset for the prop firm. So for me, assuming they're actually connecting you to the live markets, a prop firm that puts you to a live account, you can have a long-term relationship with. And like I said in the beginning, I'm not trying to do this for the short term. Personally, I'm not doing this for a payout in 5 days. I'm doing this that in 12 months, 18 months, 2 years, I can have 100 accounts making $5,000 a day, and who knows how much money that's gonna be in payouts. As long as the prop firms don't go away, this is something that we don't need to stop doing. So I like the accounts, I like the prop firms that will take me live. Not that I'm rushing or forcing myself to go there, I just don't think it's worth avoiding it. There are prop firms that after the 5th payout, they will switch you over to their live. I'll see people who get up to like their 4th payout and then they fail on purpose and then they go do it again. I know a lot of people who are banned from prop firms from trying to game the system. Like I can't say it enough. Stop trying to game the system. I have traders in my live trading group who have been trading for less than 3 months who have already gotten over $20,000 in payout. You do not need to game the system in order to win. You just need to be a good trader and follow a good plan. That's it. So I have nothing against going live. I think it's completely fine. I'll be there. Like when they offer it to me, I'm there. So going live with a prop firm can happen literally at any time depending on the prop firm that you're with, right? So top step, they'll take you after the 5th payout. Take Profit Trader, they'll do it after, it's either discretion or they'll do it when you make $10,000 in a day. Apex says they do it on a case-by-case basis. They're all kind of different. And the prop firms, like I said, that bring you live, I think it's good because you can have a long-term relationship with them. But aside from actually going live or trading with the prop firms in the live stage, you can connect multiple accounts and trade multiple accounts at once. And this is what brings me to one of my favorite parts of this section. I'm gonna break down copy trading into 3 different categories. Starting off with level 1, it's gonna be easy mode. Now what we're gonna do with level 1 trading is we're gonna go buy our first challenge account, right? So you're gonna get 1, you're gonna do this whole trading plan, you're gonna start trading. And then what happens is you're gonna pass and then you get funded. And now you're in phase 2, right? And then you're gonna keep doing exactly what you've been doing this whole time until you get a payout. After you get this payout, what you're gonna do is you're gonna come and start all over and you're gonna buy another challenge, right? So when you buy this challenge, you're gonna get a copy trader and just connect it. So you'll be trading with a funded account at the top and a challenge account at the bottom, taking the same trades on the same account size. I mean, different account sizes if you want to, but this is level 1, slow down. So if you do this all in the same account, you just keep taking the same trades, the same 3 contracts, 4 contracts, whatever you're doing. And then this one is gonna go through the same phases. And then this one's gonna start getting payouts at the same, maybe not the same time, and then this one will be getting payouts. So now you have 2 accounts getting payouts, right? You just doubled your income and you just do the same thing again, right? It's completely up to you about how aggressive you get with how many challenges you get. But this for level 1 challenge at a time. The cool thing about this is that you really only have to buy this first challenge. And then assuming you're not retrying or replaying or resetting or whatever, you just keep using house money to keep growing. It's fucking crazy. And I don't know why more people don't do this. Let's move on to level 2. Now level 2 is a little more aggressive. You're just gonna max out all of the accounts that you can get in a single prop firm and try to pass it all at once. One of the reasons I really like Apex, and that's what I started with, is I started with 20 accounts and I just took one account and connected all of them to it and I passed 20 accounts by trading one. So that's what I did. And what you can do with this is there's a couple different ways that I guess you can get to this point. Well, especially with Apex, because there's so many. You can start with 5 at a time and then do the same process. Go through phase 2, get funded, get the payouts, and then you can recycle it, and then you can do 5 again, right? It's the same account with the same rules and the same prop firm, so nothing really changes except what you're paying. One of the things that you really want to pay attention to when you get into this level is, I'm going to use Apex as an example. Let's say you get 20 accounts, and I don't know the cost of their 50Ks. Let's say it's $100, super cheap. So if it's $100, these prop firms have a 30-day renewal fee, and you're basically giving yourself a recurring membership by doing this. So if you don't pass this within 30 days, you're going to get billed $2,000. I don't think that's a big deal, and I don't think this is something that you should avoid. Hear me out. What a lot of people do is they're gonna see this recurring bill, right? This 30 days, and they're gonna be like, I need to pass the challenge before those 30 days. If you're at day 27 and you have like $1,000 left, is it worth forcing trades so that way you don't pay whatever the recurring fee is? Or is it worth continuing to just keep taking good trades and not letting the date, just like the minimum days, I don't want to let this renewal date determine when I take trades. The renewal date, the minimum days, the profit target, all of this shit has nothing to do with how the markets move or the trades that I take, right? So I don't want the day to determine whether or not I'm taking a trade. Here's how I like to look at this, and this is gonna depend on you guys, on like your finances, your savings or whatever. If I'm taking, and I'm doing this now, like I have 20 accounts already funded with Apex, so I'm not paying the renewal anymore because they're funded, but I have 5 accounts that are in the challenge phase with Take Profit Trader. So what I do is, if I have 5 accounts, let's say I'm not too sure what these are either, I'm gonna call it $100. What I'm gonna do is, I'm going to plan at least one more renewal. I'm going to pay at least another 30-day renewal. I'm planning for that. Doesn't mean I'm going to, I don't want to, but I want to plan for that ahead of time. So I think it'd be helpful to think about it from this perspective. If you have 5 accounts, you're looking at $500 a month. If $500 a month on a recurring revenue basis is going to be too much for you, then maybe cut it in half and only do 2 at a time, right? Because this is something that you really have to think about. I just really don't like the idea of deadlines with trading. I can't control what the markets do. I can't control that I'm going to be in profit every day, or if we're going to get consolidation, or if something's going to happen. So I try not to let, like I used to create a lot of goals, how much I'm going to make in a certain time. I don't do that anymore. My only goal is take good trades. Literally, like the only goal that I have written down for 2026, take good trades. That's it. As long as I do that and I follow my plan, everything else will work. If you can just ignore this 30-day renewal altogether, like I don't mean ignore it, like don't have the money in your bank account so that way you can keep the account, but don't let this determine what you do in your trading plan. I really think this is one of the biggest lessons that I've had in this entire thing, is because these prop firms like to put rules around days. Pass in 2 days, pass in 1 day. You can do this, but you gotta pay again in 30 days. All of this shit is to get you to put time on the trades that you take, and the markets don't give a fuck about time. The markets don't care about what day of the week it is, and you shouldn't either, right? I mean, don't get me wrong, you wanna know about data, news, and all that stuff, but like, if it's Monday, Tuesday, Wednesday, Thursday, Friday, I'm not changing the trades that I take or the analysis that I do because of the day of the week. I hope I really hit this one home for you guys, because I swear, I think this will make such a difference for people if you can just not care about that 30-day renewal and plan for it ahead of time. I still want to pass before the 30 days, but if I don't, it's okay. So after level 1, after level 2, we're gonna step into level 3, which is where I'm currently at right now. This is a lot more advanced. Basically what you're doing is you're taking multiple prop firms from different companies and you're combining them and copy trading them into one, which means prop firms have completely different rules. Some have news, some don't, some have consistency, some don't, and we're just combining them by trading them with one account. This for me is the most exciting thing, also the most challenging, but the scale is crazy. Let's do a little bit of math together real quick. If you have, let's say you're doing the same old $750 a day, but now let's say you have 50 accounts. I'm telling you right now, 50 accounts isn't anything crazy. I'm already halfway there. I'm at 26 accounts right now, and I just started 2.5 months ago. I bought my Apex accounts in November. 50 accounts isn't that hard to get to. You just have to follow this plan. But if you have $750 a day By 50 accounts and you're copy trading this, you're talking about making $37,500 a day. That's $187,000 a week, which comes to $750,000 a month. By making $750 a day on 50 accounts and following this scaling plan, you can be pulling $750,000 a month. Now I'm talking profit. This is gonna depend on payout rules and all that stuff, but like the scale is there. You can take 3 contracts, maybe 5 contracts, make $750 and end the month with $750,000. I think this is fucking unreal. And that's only 50 accounts. The only limit is as many accounts, as many prop firms that exist. That's the only thing that's stopping us from growing as much as we want and the limitations of a copy trader. But this stuff gets me super excited. The hard part with this thing is that you have to have one master account or one master plan, right? So whatever trades you're taking on your lead account, the main account, it needs to follow the rules of all 50 other accounts in order to get payouts. It's not that difficult. You just need to go through this process for each account and then see where they all fit in together. It's fucking worth it. So there's a crazy amount of scale that you can get into when you start passing these challenges consistently and that you follow this plan. But at the end of the day, it's still somebody else's money. At the end of the day, the money that you're getting is coming from a different company that we've seen prop firms disappear before. It can happen again. So what do you do with the money that you're making? When do you go live? Do you go live? And how do you navigate going into a live account? Now, what a lot of people say that they're going to do is, I'm gonna get a couple payouts from these prop firms, I'm gonna put it into a live account, and then I'm gonna start growing my live account. I don't know if any of you guys have done that. I have yet to talk to somebody or many people who are doing that. I'm doing it, and I'm gonna break down a couple different ways that I like to look at this, but I don't think this needs to be this or that question anymore, right? So you could actually be trading with these prop firms, going through this entire phase, this process that I just broke down, and taking payouts and putting it into your live account, then just connect the live account to your prop firms or your funded challenges, add a multiplier to it, and that's it. This is what I would do if I wanted to be aggressive, which I do. So the way I see it, you have 4 different buckets that you can be really putting your money from your payouts. The first one, we're gonna put you, me, whatever, right? And I'm gonna do this, right? Your needs. These are the things that you need: food supply, water, housing, whatever it is. If your life is in shambles and you really need to pay your bills, this is number 1. This is the priority, right? First, you have to pour into yourself. Now, number 2, where I would be putting the rest of my money would be more funded accounts. And the reason I would be going into more funded accounts is because this, in my opinion, is the highest leverage activity you can do. This gives you the highest return on your own investment. If I can spend $500 on 5 accounts and then be getting $5,000 in less than a month, this is a very high leverage thing to be doing, especially if you're a good trader, right? So for number 2, my money, my payouts, right into the funded accounts. The third bucket that I'd be putting my money into is my live account. And the live account, I just look at it as a savings account that compounds really fast if you let it. I could be taking 3 contracts on my funded challenge, but I could be taking 30 contracts on my live account, because as it grows, the margin grows and I can take more with it. So these, for me, these 3 are priority. Until I max this out like to an extreme amount, my money isn't going into this 4th bucket. And this 4th bucket is me once. So I want to wrap this course up with a story specifically talking about wants, because I understand the temptation when you start making good money to start spending all of the money on really cool shit and get all of the nice things that you see. So I've been full-time trading for 3 years now. I was a police officer. I quit 3 years ago and to take on trading full-time. At the time, I was making $6,000 a month trading. I was making about the same as I was as a police officer from trading. So when I quit, it's not like it was anything crazy. But 2 months after I quit the police department, I made my entire year's salary in 1 month from trading. I made $86,000 in 1 month. The next month, $100,000. The month after that, I made $160,000 in 1 trade, right? So I just started catapulting into momentum. And I was like, this is fucking great. 3 months later, I bought a McLaren. I bought a $200,000 McLaren cash. I moved into a $2 million condo that I still live here, And I bought a motorcycle cash. I paid off all of my debt. I paid off my girlfriend's debt. I retired my girlfriend. I bought my employee a car. I paid off all of his debt. I did so much crazy shit. And I don't regret doing any of it. I learned a lot of lessons from doing some of this stuff. But if I can take one lesson from what I did when I first started getting like a lot of momentum in my profit with trading, is that if I hadn't pulled out everything I was making and instead I used it as gasoline to pour on the fire, I don't know how much further along I would be, but I know it would be a lot further. And once again, I'm not saying I regret doing that. I'm just saying moving forward now, my wants bucket is really small. I love where I live. My life is good. I still have the McLaren and all that stuff. But like, I've learned that every time I pull money out of either of these buckets, right? The funded accounts, the live accounts, anything that's making me grow, it's going to slow down my growth. And it doesn't feel like it at the time because you're like, fuck man, I earned this. I deserve this. I'm telling you right now, if you do that shit too soon, you are going to slow yourself down in the moment of momentum. And I just don't think that's a great idea. I know this is contrary to what maybe a lot of people say, especially in the trading space, but if you can delay the gratification of actually paying yourself and feeding your wants, and you can just keep compounding and growing, you will grow so much further, so much faster, especially if you follow this plan. I know there was a lot of math that we controlled, but don't forget, if you look below, there's a trading plan calculator that will do all of this fun math that we just did for you. I really hope this course was helpful for you guys. If there's anything that maybe I didn't cover or anything that you guys have questions on, just put in the comments below. I'd love to hear it, and I'll see you guys in the next video.